if you gain any sort of value from this episode, I'm just going to do it really quick. If you get any sort of value from this episode, please share it with a friend. If you're entertained or you learn anything, share with a friend. Cool. So there are a bunch of people in the city who have their own thing. They have their own like side hustle. Mm-hmm. They could be an artist. They could have their own T-shirt company. They might work 60 hours a week and they sell something on eBay on the side. When would be a good point to LLC the business? When do you know you should do that?
I would say a good time to do it is when you've crossed the line of just being really a hobby, right? Where you're actually have a motive and an ability to make a profit, right? If it's purely a hobby and you're like, I'm losing money on this thing, but I like doing it, maybe not. But if it's something like, hey, I can make $1,000 a month on this, do it. Because I think I've seen businesses go from 0 to 100 in 6 months, and getting that stuff done early can be worth it. Again, people need to know that, the cost behind doing it, right? And you got to pay the filing fees and stuff like that. But at the end of the day, I'm a proponent of getting stuff off of your social security number, and not operating under an individual when you have a profit motive behind you. Hi, I am Brien, and this is my golden hour.
Oh God, what's going on? Where am I going? Dad?
Yes, my son. I am Deuce, the deer god.
I'm so confused. Who am I?
Derek. Your true name is Dercules.
Wait, what?
Yes. You are Dercules, the god of the forest. Season 5.
Hosted by your favorite podcast host, Big Bochi. You already know the deal, mother. What's up? We're newly LLC. Shit, the beginning was so dope. Mm-hmm. Damn. The mic's just cut, so now we're back. But with that being said, C-Mac, introduce yourself.
Yeah, I'm the rookie behind the mics and the cameras. I am Chris McCormick, big college friend of Connor Holloway, and happy to be here.
And then to my right, we have Captain Clean Cut. Introduce yourself.
Brien. I'm a CPA. I work in Boston. I just got connected to these guys, and we have a future CPA back here. He's being humble, but he's starting at PwC next week, so he's gonna fact check us here. So make sure keep me in line.
So is that like very coveted? Like in the yeah, I got my.
It's CPA. A lot of work. I mean, it feels like a long time ago for me that I did it, but what I was saying to CMAC before was it's like you're taking 4 tests, and you have 18 months to pass 4 tests, right? You also have to have 150 hours of education, so you get 120 from undergrads. You need to get another 30, so you need to go to grad school essentially, and then you need to get a certain amount of working hours under your belt too. So it's a lot, right? So it definitely is not something like when people wait. He was smart. He did it right after he graduated. When you wait several years, life starts happening, and then do you really want to be going to Starbucks at 8 o'clock every night to study? No. So yeah, it's definitely something that's coveted.
My thing is it's mostly it's a test of discipline, right?
For sure, yeah.
100%. I'm not the smartest guy in the room. I'm sure he wouldn't say he was either. And it's
who's the smartest guy in this room though?
Probably Greg.
No, probably him because he's just out of
what
school.
About me? You know what I'm saying?
You just the stuff in school you learn is just he'll learn. You don't use it in the real world as much as you think you will, but there's definitely you're taking the CPA exam and they're asking you some crazy formula you're trying to remember, and now it's oh, you can Google it. It's so things definitely change on that front.
Well, yeah. I mean, academics will be talk for a different time.
That's right. Yeah. We're all beyond that stage now.
Yeah. Not all of us, but
well, not all of us.
Yeah. There's as I was saying before we had to restart. There's some great news coming out of the Golden Deer Camp. I just got my LLC, so Golden Deer Productions. I believe that means it's a registered business.
It is.
Look at that, man. What do you guys want from me?
You are a business.
You have your LLC, right? Or do you have your
Similar.
incorporated?
So when you're in a professional services, it's something different. It's called professional corporation, a PC. It's my business name is Greg O'Brien, CPA PC. It's essentially the same thing. It's just when you have sometimes lawyers and accountants and doctors need to get a professional corporation instead of just a corporation. So It just we
So you don't have your LLC.
It's not. It is not a legal LLC. No, it is a professional corporation.
Okay, so
So you're cooler, yes.
Not really, because that's why you're here. I got no idea what I'm doing.
Yeah.
But I figured, hey, let's run an episode and let's figure out, dude, what is the LLC? Why does it help people? And, you know, kind of start building the young entrepreneur business podcast mindset. And so CMAC, again, my close friend, is going to be an accountant at PwC. And so you're totally knowledgeable in this, right?
Yeah, that would be the idea, but I think I'm going to learn a couple things too.
Well, I'm assuming that we probably learned this stuff at PC.
You definitely learned some of it in like business 101.
Business law and all that stuff.
Oh, so this is 101. You're being disrespectful now, Greg.
I'm going to bring in tax 101 and 102 as well. So.
Okay, word. And you went to Bentley?
I went to Bentley, went there 4 years, and then I did my master's there as well.
So my sister went to Bentley, and we were kind of talking about this. Where did you live?
So I lived all on campus. So I played football. You couldn't really live off campus. So it was all on campus. And then I lived in like the Fenway dorms and then Copley South, which is...
Fenway had probably just opened up, right?
It was there for a few years before I got there. I'm not that old. It was there. It probably got there in 2005. And I started Bentley in 2008.
Oh, word, okay. Yeah. I know those are like the coveted dorms to be in.
Yeah, they're nice. They're nice buildings. So
you know that the walking bridge that crosses over the street? There's like these 3 little houses there. You know those little white houses? My sister lived in one of them.
Okay.
And it was like the weirdest living situation ever. Have you ever been in those houses?
I actually cannot say I have. I know exactly what they are. I've never been inside of them. I don't even know what they are.
Dude, I was like coughing up asbestos when I walked in that thing. I was like, oh my God.
Yeah, they're kind of sketchy looking. I'm not sure what the purpose of them are.
Yeah, I think it was haunted, honestly. Yeah. So you go to Bentley, right? And you say, hey, this is a business school. Mm-hmm. I want to get into business. Did that happen before you went to Bentley? You always knew you wanted to shift into business?
Yeah.
Because honestly, I'm newly into like, damn, I really love the art of business and how it works.
For sure. Yeah. I mean, I think I had an idea that I wanted to do business from a younger age. I can't say I had like plans to do what I'm doing now, but I thought.
What does your family do?
Nothing to do with this. So my father was a state trooper, retired. My mother was a pharmacist. So both like work for the same type of company for 40 years type of deal, not, entrepreneurial, I'd say. So yeah, I didn't want to go down those routes. So when I was looking at school, I ultimately went to Bentley because I decided I wanted to play football. I looked at Providence College. I was one of my final 3. And I kind of eliminated.
Where are you from?
From Canton.
Oh, word, okay.
So I kind of eliminated some of the liberal arts schools. I just didn't feel like those things were up my alley and who I am. So I said I wanted to go somewhere that has a business school, right? So ended up choosing Bentley, and then you get into the classes and stuff, and like you're taking all the general business stuff, and then I originally started out in kind of, I think it was called like corporate finance and accounting. So it's like, oh God, wasn't for me. Like some of the finance part of it wasn't for me, and I was like, I like accounting. I'm pretty good at it. It made sense to me, right? Like it was an equation that made sense that I could logically put together and take apart. Not that I loved it, but I got it and I understood it. So I decided to major in that, and then somewhere along the lines, I got an internship at a local CPA firm during tax season, like doing tax stuff. I'm like, oh, this is pretty cool. I like, working with people's money and corporations' money, and figuring out how this whole system works.
This is like a summer internship at Bentley.
Yeah. It was technically a spring internship or something, but yeah. So that was my first foray into it, and then I ended up getting hired by that firm full time upon graduation. So
how were you at football? Were you good?
I was decent. I was actually a linebacker.
No way.
Yeah, I was a little bigger back then, but yeah, I was the captain.
Young Urlacher. Oh shit.
Yep.
So you were a real deal.
Middle
Bentley's
linebacker.
a good team, dude.
It's a good team. Yeah, we had a good squad my junior year. We blew it, but yeah, we were undefeated at some point. Senior year, we had an up and down season, but we did a good.
Under your leadership, there's an up and down season.
We went down to Tennessee the first game and played this squad like that.
Was it Middle Tennessee?
No, they were called Carson Newman. They were they'd won all these national championships.
Those
like different breed of like players down there, right? And like that they breathe football. We go there. It was like we're not used to playing in front of these big crowds, like legit stadium, this long trip, and like we held in there till the very end, just lost. But that was when all right, we're pretty good. We can hang in there with anybody. So
you're washed up, Greg.
I'm so washed up. I know, like my back hurts today. I'm like, geez, yeah, I'm really washed up.
And did you play at Canton High?
No, so I went to Severian. in
Oh,
Westwood, yeah.
God.
Yeah.
We got a hawk on us.
What do you got? Where'd you guys go?
Lincoln Sudbury.
Lincoln said.
Well, I did. C-Max from Connecticut.
Yeah, I'm originally from Connecticut.
Okay. Okay.
But you know Severian.
Yep. Yeah.
Severian's the factory.
Powerhouse. Yeah.
So you were big Catholic conference? Like, were you all Catholic conference type thing? Like, played CM?
Played CM. St. John's Prep's our rival.
And were you nasty in the league as a senior?
We were pretty good. Yeah.
No, I mean you specifically.
Decent. I mean, like you're surrounded with like a lot of talent there. Like if my senior class was 25 people, I want to say 19 went on to play some level of college football, whether it was D1, 1AA, or 2 or 3. So like I was just in the mix, you know.
Well, you know, it doesn't work like that in Massachusetts though, right? It's like if you are a really good college football, really good high school football player, you might be able to play at a NESCAC, like a Tufts or a Trinity.
And I walked on at Bentley too, so it wasn't like,
oh no way, you weren't even recruited.
So I guess when I looked at it too, I was like, I'm going to pick the school over. I got in there on my own. I'm going to pick the school based on what I want to do, and then once I got in, I was like, all right, I gotta do something here. So
I gotta get some shorties to like me. I gotta try out for the team.
So it's so funny. Let's see, so like three of my Severian teammates all went to Bentley with me, all played football. So it was 4 of us, center, receiver, and another linebacker. All of us played Severian together, all went to Bentley together. So like we had a squad rolling in there.
Wow.
So immediately they're like, who are these meatheads coming from Severian?
You guys were just putting steroids in your body and getting crazy.
So you get there freshman year, it's like all these little cliques, right? Everyone's like, you know, there's like the couple kids from Waltham High. There's like the public school kids. There's the out-of-state kids. And it's like...
There's that one foreign kid. And everyone's like, dude, can you speak some English?
Exactly. And then there's like the Severian kids. Like we're just like our own little clique. But ended up having like a great class for 4 years. So best friends with all these kids still from all over the country.
All the Severian kids?
No, yeah, them and all the kids at Bentley.
Sound like BC High, isn't it?
I had 3 kids in my class from BC High, like I'm best friends with them to this day. Like I love it, but like the freshman year is like the whole rival, you know, against each other still. And there's like one kid from CM, and they were terrible. So
yeah, that happened to us too. But yeah, these BC High kids when we went to PC were in as a unit.
Lincoln Sudbury wasn't too far off on our floor too. It was like
we had a little squadron,
but then
then it deviated a little bit.
Yeah.
So quick gear shift here. So I want to make sure when we run this episode, we produce some hashtag value.
Hashtag value.
Hashtag value.
So I'm in the business of.
Exactly. So I'm, again, on an accounting tip, pretty illiterate as to what taxes are. My mother's a financial manager. My mother actually went to Bentley as well.
Okay.
And I'm learning, but I'm totally illiterate on what my taxes are, what an LLC is, what it does, what benefit it provides me. And so I was like, all right, there are other people definitely in my position who have brands, who have started stuff up, who have things going for themselves, and are probably considering registering their business. I just want to make sure we can simplify what the LLC does, and we can have a good time.
Love it. So let's start very basics, right? So Connor.
One sec before we start.
All right. Too excited.
I know. I'm pumped too. It's going to be great. Before we start. Go.
All right. So let's start one-on-one, right? So Connor, you go into business. You're yourself. You have no entity, nothing, right? One-on-one, you just show up today. You start doing podcasts. You're getting paid to do it. So you are considered a sole proprietor, right? So there's nothing wrong with that. You're a sole proprietor. You make income. You have expenses. Everything's under your Social Security number. That's the easiest way to look at it, right? So you're not protected under
one man team.
You're a one-man team, right? So you go to file your tax into the year. You are just Connor Holloway doing podcasting, right? There's no business name. There's no EIN.
John Connor Holloway.
John Connor Holloway. So that's what you are, right? If you're just starting out and you're just a couple months in, there's nothing wrong with having that. Okay, so that's the most, you learn that in business class 101, right? I start selling lemonade, I'm a sole proprietor. So that's fine. Okay, so now you look at, you're getting a little more established, you're getting some traction, you have this beautiful space now. So you're like, I have ongoing expenses, I'm making money here. Okay, so the first way to look at LLCs or incorporating is not from a tax perspective. It's definitely from a legal perspective. Not a lawyer, but I know a decent amount about why you're doing that. So the first thing you got to look out for is yourself and your assets, right? Let's say that you had a trust fund, okay? You had all the
That'd be fire.
right. So you have all this, or you have a lot of money, you have all this different stuff, right? The worst thing, and you're Connor, the sole proprietor here, and I'm sitting here, and I don't know, this air conditioning unit falls on my head, and I get taken out. All right. Likely, I'm gonna sue you too. Okay, so. So
I drag your body in the back, bro. We'll not let that news break.
So that happens, right? And now, the lawyers get involved. So Connor, the sole proprietor, now you're getting sued individually, and so is probably the person who owns this building. But so you're getting sued as an individual, and technically, everything under your purview, under your social security number is up for grabs. That's all kind of fair game, right? So you don't want that to happen now that you're running a business. So back in the day, they created something called a limited liability company, and essentially it's like it sounded. You have limited liability as the owner of the company, right? So you're essentially liable for the assets and the debts that you put into the company. So you're not. So if the same situation happened, I can only go after a certain amount of things that are encapsulated in your business. I can't go after everything in your life, right? Without getting into the nitty gritty weeds and piercing the corporate veil and all that kind of stuff. That's the basic premises of it, right? So you're doing it to protect yourself against creditors and debtors that could, potentially come up at some point.
So how do you designate what you're allowed to go after if you try to sue me now that I have an LLC? So let's say that AC hits you in the head, right? What are you allowed to try to go get?
So, without giving a legal answer, it's generally what your assets of the business are, right? So let's say your business let's say you just had your business bank account, right? And that's, you had cash in the business bank account. Maybe you had some customer contracts. Like that's probably the stuff that's under that scope. What if you own the business in the same LLC? Maybe that's up for grabs too.
So like, let's say the AC hits you in the head. This is also going to help the conversation moving forward. This podcast is not monetized. Mm-hmm. So.
We'll get to that. That's still beneficial though.
Absolutely. But I use this as anybody who's watched the show, I've started to develop other business ventures with the children's author. I do a lot of work for Jerry. You can go to like episode 50 something because Jerry came up here. But I need to get a new LLC. And so I was like, okay, cool. Let's do this. Let's get this thing done. Seem like you're hanging in there. You're nervous about the software, huh? But before we had done the LLC, I thought it was, I'm going to sound like ridiculous, and I hope the feds don't come after me, but I thought like, if you get the LLC, like I could start writing off all my Chipotle meals, and like those are for free. I can write off gas, take people out, and then it's for free. The government's paying for it. Is that true?
That is not true.
Oh!
That does not mean that you can't write some of that stuff off, right?
Have you done that?
Of course. So meals and entertainment, business meals are definitely deductible. So let's say,
how do you constitute a business meal though?
Okay, so let's give an easy example. Let's say that you're talking about becoming my client, right? And I say, hey, let's go talk about, I'm going to bring you out to Chipotle, right? So we go out to Chipotle and we talk about what it would be like to work together, how I could help you. That now is a business conversation happening at a meal. I can legally write off that full cost of that meal, right?
And the government will never know if that's actually the structure of the meal. It's the truth, right? They're going to, me and CMAC. Well, what I'm saying, let's say we all go out to lunch.
So with any of this stuff, right? So you're playing an audit risk, right? So if you were audited and they're going to say, what is this business receipt, for, how you need to, the burden of proof's on you to prove that it was a business meal, right? So you'd have some kind of record that you and CMAC were out discussing business or doing some kind of business thing, right? So if there's a West End Johnny's bar tab at 2:30 in the morning, probably not going to pass the test, right? So if it's Monday to Friday at noontime, maybe you had a business purpose for that, right? So
why would they audit?
Okay, all right.
If I'm bouncing around a little bit,
we're gonna go down the audit rabbit.
Well, I'm saying, like, why would someone audit me right now? We're filming this with 2 iPhones. You know what I'm saying? These aren't $500,000 cameras.
So that's actually a good question. So in general, who gets audited the most are the smallest businesses. Why? Because if you're, they call a Schedule C, so a sole proprietor, maybe a single member LLC who is just themselves, the government generally has the view that they're going to probably not know the rules or maybe abuse things more, right? So
Find the loophole.
not necessarily loopholes, just doing things wrong. So they're like a Schedule C, which is where you report something like a sole proprietorship, has the highest audit rates of anything, right?
That's very surprising. I
Versus
think they'd
if
want to
you-
do rich people, wouldn't they?
Well, the rich people usually know what they're doing.
The rich people have a great team of lawyers and accountants and tax people on their side, right? So they're doing things legitimately. They do get audited, but they pass them. Versus you may have someone that just doesn't know what they're doing. They're like, maybe I spent $10,000 on this expense and I spent $5,000, all these round numbers, and that's usually a red flag right there if everything ends in a zero, right? Probably not likely.
That's probably what's going on in the Golden Deer Camp, honestly.
So again, audit risks are generally low. So if we can get into how do you make sure you're protecting yourself against an audit. But if it happens, they're not as rare as you think, I guess. And most of them are what they consider kind of paper correspondence audits. Like it's not like the agents walking in here with the gun and like going through stuff. It's
Give us our money.
It's more about like they send you letters and you send them documentation back and forth, and it goes on for months. There's different levels to it, but we probably shouldn't go down that rabbit hole because it could go on forever.
Okay. All right. So we'll bring it back to the LLC.
Let's go back to the LLC.
All right.
Okay.
So right now, I have my LLC, right?
So you have your LLC. So you are to start an LLC. It's as a one person shop. Very simple, as you probably know, right? You go to the state or the.
I used a service, an online.
Okay,
service.
use a service. You can use like a Inc.com.
It's called Inc. Authority.
Yeah, any of those things, right? And they're acting as your registered agent. They'll go to the state of Massachusetts or whatever state you're in, and they will file the incorporation paperwork, just saying, my name is Connor. This is Golden Deer Productions. I'm the business manager. Here's our address. Here's the purpose of our business. Pay the $500 or whatever the state fee is for that state. Boom. They send it to the Secretary of State. You get approved.
For reference, it was like, I'm just trying to be transparent. I think it was around like 570 with
the incorporate with the
I had to get the
service.
federal tax ID number too.
Right. So then that's the state, right? And then now you have to go to the IRS because you don't want your social security number operating anymore for this business. You want to go to the IRS. So you go there, you get an EIN, employer identification number. So now essentially it's the social security number of your business, right? So you get a number, it looks a little different, 9-digit number, and that's now everything you do. So your bank account, your credit cards, your anything business-wise is going to be under that EIN. So now if someone has to send you something, it's going to be under that EIN. So when the other copy goes to the government, the IRS, it's all under that EIN. It's not under your social security number. And we'll get into why that's important. But so that's kind of the basic steps. So you're hiring a service, you're hiring a lawyer, or you're doing it yourself, and you're registering with the state, and then you're registered with the IRS, and then in its simplest form, you're done. So now you're set up.
So I have my tax ID number, right? What's the next step? Operate as a business? Have I filed all the right paperwork?
So the next step is, all right, am I going to be a single member LLC, which means that I'm the 100% owner of this LLC, and I'm always going to be?
Or am I going to be in partnership?
Got it. Look at that. You know your business. So are you going to go in partnership? So if you and CMAC went into partnership now, right, you can still be an LLC, but now you're considered a partnership for tax purposes, okay? So now you're kind of a full separate entity from yourself. And if you're going to go into a partnership, one partner, two partners, however many partners, you're going to want to probably get a lawyer involved because they're going to create something called an operating agreement, which essentially says, here's how the business operates. Here's what happens if we break up. Here's what happens to the debts. What if one of you dies? All sorts of stuff it covers, right? And it's better to have it to kind of for CYA than anything.
Do you need a lawyer for this, or could you just be totally transparent with your business partner and then write out
whatever
your
you do,
contract?
you should write it down and sign it. There's definitely some boilerplate stuff you can find out there.
Elaborate. What do you mean boilerplate?
So you can find some templates online. They're just a basic partnership agreement that goes through like the basic provisions of, how is the income split up 50-50? Who owns what? Who contributes what for what shares in the company? And then what happens if you want to leave, right? You can't just walk away because you're liable for the debts of this business. So how does he buy you out or vice versa? How does that all work?
What happens when the contract ends?
Exactly. And what happens when you get hit by a bus? Like, does you have to pay for everything? Now, or does it go to your estate, or does it go to your next of kin? So all that stuff is hammered out in those kind of agreements. So if you're going into business with someone you don't know, you should probably do it. Even if you do know them, you probably should do it, because as they say, and I've heard in the podcast, the only good partnership is a sinking ship. So partnerships can be tough, especially when you don't know the person. Even if you do know the person, I've dealt with different clients along the way where it's brother, sister, husband, wife, best friend partnerships.
It's ugly.
Yeah, I mean, when big money comes into play or big debt comes into play, it's every man for himself. So having that, as much as you think it'll never happen, I think having that stuff written down and documented is probably safe.
It's just an awkward conversation, you know. I from what I'm doing now, there's no like pressure to be like that, but it's such an awkward conversation if you're close with someone, like, hey, can you sign this contract?
Right. And there's certainly people you work with that don't get formal contracts done and stuff like that. Because, you know, they're
Do you understand what I'm saying, Mike?
Yeah, no, I think but it is important, like you're saying, because you never know what's going to happen when money gets involved. People are greedy, or people
Makes things ugly sometimes.
Yeah.
Man.
It can, right? But like, let's say, you know, this business blew up, right? And you're making millions of dollars, and then let's just say that, you know, something happened. Let's say there was, you know, spouses involved, is a divorce involved. What if, does the divorcee have a right to part of this business interest?
Dude, you guys are crazy for wanting to do this job.
So I mean,
You're
these
dealing
are
with all the ugliest stuff of money.
This is, yeah. I mean, this is way into like the legal
that's law
area right now, right? So, but you know, you encounter these situations all the time. People ask you advice about it, and it's, you know, that's why I say, you know, do you have a partnership agreement? It's usually like no, or it was from 1972 and it's in someone's closet. We have no idea where it is. So, you know, all the time, if it's the husband, wife, or the brother type of stuff. So yeah, I mean, I think writing it down is probably a good way to start. But if you're doing it by yourself, do you need an operating agreement for yourself? No. So some people still do it. Yeah. Because they want to be super formal. But you don't have to.
Okay, so my partnership's signed. I mean, it's not a partnership, just me, right?
You're a single member LLC.
Yeah, I'm the boss around here, dog.
That's right.
Big dog. Now what?
Okay, so let's stop there. Okay, so let's kind of shift
Would you mind just taking one step into the mic?
Yeah, sure.
It just echoes a little bit here sometimes.
So let's stop there and kind of head into like the tax world now, right? So
oh god,
this is where it gets fun.
This
is where you save money. Okay, so
this is where we beat the system.
the system, as you refer to, is a system of incentives for business owners, right? So I would encourage people not to have a W-2 if they don't have to, because the tax code is generally written for people to start and grow businesses, or to start and build real estate. So real estate and business are the two things the tax code focuses heavily on, right? There's not a 77,000 pages. There's not a ton of pages giving a ton of stuff for the working man. Obviously, there's just not, right? There's definitely things, but the majority of incentives are for business owners, right? Because they want you to grow this and hire people and put money back into the economy and pay taxes, blah, blah, blah. So that's where you kind of start, right? So now you just opened up a huge book of incentives for yourself being, in business.
What do I get?
What do you get?
Yeah.
Okay. So let's kind of start here now. So again, you're as default single member LLC. You, for tax purposes, it's called a disregarded entity, which means that everything that happens in this entity ultimately flows to you as an individual, reported on your individual tax return, taxed at your individual rates, right? So let's say outside of this, you were making a ton of money in some other business I don't know about. So now all the income gets combined, you're taxed at that rate where all your income falls, right? So there's not like a single member LLC tax rate. It all goes back to you as the individual, or it would all go back to me as the individual, or if it's a partnership, it would all go back to both of you as individuals, right? Split. So that's starting point one. So now the government says, as an LLC, you have three options. Single member LLC disregarded, which you are. Basic, that's the default when you apply for the EIN. 2, you can say, okay, I'm going to elect to be taxed as an S corporation. 3, you can say I'm going to elect to be taxed as a C corporation. So C corporation, think like Coca-Cola, or I don't know, Google.
Think that GDP in 5 years.
Yeah, big, right? So like, that's your
and
typical.
I'll have you head up the accounting department.
Yeah, I don't think so. You can outsource that to me, but I'm not going to be working.
Okay.
So that's where those are your three choices, right? Now I say, okay, geez, what do I want to do? Well, I want to be either one. So this is where people generally rush. So I say, stay as a single member LLC until you have reason to be one of the other two. So an S or a C, right? So in general, what I do is I usually sit down with someone, a prospect, and say, hey, look, let's go through a survey here and figure out which is the best for you, because I don't think you should do something now. If I can save $100 today by doing this. No, you got to look 5 years down the line and see what's going to happen, what you think is going to happen with your business and what you want to happen, and then plan that way, right? So let's go through a couple examples. So an LLC defaulted like you are, it is definitely fine for like the growing entrepreneur that's not making a ton of money yet, that's just kind of on the upward trajectory, right? You have tax incentives, which we'll get to, and essentially you're operating the business and all the money's passing through to you. You're not paying yourself a salary necessarily. It's the money. The money goes into your business bank account. You can take it out at will, but at the end of the day, if you had $100,000 in revenue and you had $50,000 in expenses, you're going to get taxed on $50,000. Okay. So what you're getting taxed on, so you're paying income tax on that, and you're paying self-employment taxes. So
what's the percent on the income tax?
It's whatever your individual rate is, right? So probably, with the new tax rates that you're probably looking after deductions, you're looking at 18 to 20%, somewhere in that range.
So should I be saving whatever 20% of the 50 racks?
Yes. Yeah. I mean, no.
Are you
seriously,
laughing? I'm being serious.
No, there are a lot of people that do get to the end of their first year or bit in
They just
business
get smacked on
because
taxes.
it's a cash flow thing too, right? Like you're making money, but you're spending it as fast as you are. You're trying to grow the business. So, and then the government comes calling, right? And there's no companies withholding taxes for you now, right? Just it's up to you to pay them. So you're a single member LLC, so you're paying the tax on that net income, right? And you're paying the tax rate, which is, your individual rate, which could be, anywhere, plus you're paying self-employment taxes. And what those are, if you have a paycheck, right, you look on the right side of the paycheck, there's like all that Social Security, Medicare, FUTA, FICA, all this, like the little stuff that comes out, like no one pays attention to, but it adds up. So, Chris at PwC, what happens is PwC pays half, 7.5-ish, and then you pay the other half, right?
Of the self-employment tax?
Right. So it adds up to about 15.3%, right? When you're in business for yourself, you are the employer and you're the employee, so you're paying all of it, right? So that's a little bit of a negative, right, to start here on the single member LLC pass-through, because you might have a higher tax burden. You're getting deductions too, but people are usually not aware of that they're paying the self-employment tax on top of income tax.
So I'm getting taxed 35% of my income?
It's not that simple. So although you pay both sides of the equation, you get a deduction for one half of it, which means like a deduction would be, say it was 10,000, it's 10,000 times your tax rate, right? So if it's 24%, it'd be a $2,400 savings. So it's a little bit of ins and outs there, but in general, yeah, there is a burden there that you have to, as the employer and the employee in this single member LLC, you have to pay. So now let's say you're making $120,000 net income, right? So you're doing well. You're making six figures after expenses. Now, some people say, hey, what's this thing? What's an S corp? Why should I become an S corp, right?
Before we move on to the S corp, can we just go back to that real quick? So you're saying at the end of the year, just tell me exactly what I'm going to be paying percentage-wise.
You're going to be paying income tax on your individual rate. I don't know what that is. So that could be if you had some side gig, you're making $1 million, you're going to be paying a lot, because all this income's going to be taxed at your ultimate tax rate, right? Or if you had, let's say you're like a Bitcoin millionaire and you sold a bunch of Bitcoin, there's other stuff that plays into it.
Let's say I'm not Big Boach in the back of the warehouse.
This is it.
No, let's just say I'm working at a job.
Mm-hmm.
Actually, this would be a bad example. Let's just say base level, I'm making $50,000 a year.
Mm-hmm.
What are my taxes looking like?
So your taxes are going to be, you're making, say, $50,000, right? So you get your $50,000, and then I'm not going to go into we're going to need another deduction in a second, but you get your standard deduction off of that, right? So now you're down into the 40s. So you're getting taxed on like $40-something thousand income tax, right? So
what is the standard deduction?
So you have two choices. You can either do the standard deduction, which is a little over $12,000 this year. It doubled from what it used to be. And then, or you can do itemized deductions. So itemized deductions are like your charitable deductions. If you have a house, like mortgage interest, state and local property taxes, income taxes, some certain medical stuff. So if the aggregate of those, for someone that's usually young and growing, they usually don't have a lot of that stuff. So generally the sum of those are not greater than $12,000 for a single person.
So just real quick rewind. So a deduction is, okay, I pay 50 racks, but the government's only going to tax me on 38,000.
Essentially.
Got it.
Yes. So then you pay the rate at that. So that's, you're probably looking at like, I don't know, between like 14, 15% in that area, right? It's not the tax scale is not flat. It's progressive, right? So you got to mix it together. But, so that's one part of it. And then you also have to pay self-employment tax on that, right? So
they're taxed on 38 racks.
Mm-hmm.
So how much money am I giving the government off the income tax?
You're giving them whatever that math is. So like, just call it 15% of that for that example.
So what is that? Do you have a phone on you?
15% of 38,000.
Yeah.
I don't have my phone on me. 40,000, 10% of 40,000, 4,000, 5% would be.
So that's the income tax. So I'm paying
Yes.
4 or 5 racks, right?
Mm-hmm.
And then on the other end, now we do the self-employment tax.
Correct. So you're filling out what's called a Schedule SE. So that is, in the simplest terms, right? So you're paying the employer and the employee Medicare, Social Security taxes for yourself. And that's essentially 15.3%. However, half of it, right, goes back as another deduction to you, right? So it gets a little complicated. So it's not just 15.3% times that number. You get a deduction for one half of that number. And I remember a deduction is
a deduction after they calculate the 15.3%.
right. So after, so let's call it with our arbitrage, like 9 to 11%, something in that area, right? That's the additional tax you'd be paying. So if you start making a ton of money, right, like that's going to add up. That like extra self-employment tax going to add up. So usually when you get to like 120,000 or more, that's where you might want to look at doing an S corp, right? So an S corp is not a separate legal entity; it's still an LLC. All you're doing is saying, "Hey, government, I'm choosing to be taxed as a small corporation, S corporation, right?" Why do you want to do that? A couple of reasons. First of all, now as an S corporation, it's a little more formal, right? You're going to have to file a separate tax return, 1120S, so it's a completely standalone forms, right? You now are not only the owner, but you're also an employee. You're hiring yourself, right? And why do you want to do that? So it is a funny concept. It's just a one-person shop. So I'm Mr. Owner and I'm Mr. Employee number one, right? So what they say is, okay, now that you're making money, you can pay yourself an ongoing reasonable salary, right? So let's say you're making 120, you're going to make 120 net. You say, I'm going to pay myself half in wages. Like, so every month I'm going to, have ADP or Gusto, I'm going to run payroll, pay myself the equivalent of 60,000, right? So that 60,000 gets paid. They're withholding the income, the Social Security tax for you, right? Just like you would if you're working at PwC, they're withholding those taxes for you. It's all taken care of, right? But now you have another 60,000 left over, okay? So that's considered now your owner's profit, your distribution, right? As, the money maker, right? So you paid yourself as the employee. Now you have yourself as the owner that has $60,000 of profits left over after paying yourself. The biggest advantage here, ready, is that on that 60,000, you're only paying income tax. You're not paying the Social Security, Medicare, payroll tax we just talked about, right? So you're saving that 11% we just talked about. So on 120,000 by being an S corporation, you're probably looking at $4,500 to $5,000 cash savings. That goes up as the income goes up.
And then we could buy new cameras.
That's right. But
I want to just make sure we reel it back to the LLC real quick, just because I want to make it applicable for everybody who's interested in getting an LLC. So I pay those two taxes, right? Mm-hmm. And so you're saying roughly, this is if I'm making 50,000. To be honest, I would actually list my income, but I actually don't necessarily know how much I'm going to make this year because things are moving, shaking. Things are good.
They're in flux.
Absolutely. So there's that 4,000 off the income tax, right? Roughly. And then there's the self-employment tax. And we said I was going to be paying about 9 to 11% on that of the 38,000.
Yes.
So what's that?
That's like 10%. So
10%.
3,800.
3,800.
Yeah.
So about 7,800 in taxes.
Approximately.
Okay. As I make more money, I'll pay more taxes.
with more savings.
Well, yes, we'll get into ways we're gonna save, but yeah, we're talking right.
Ooh, that's saving stuff.
Your baseline. No, I don't mean saving. I mean save taxes. Like right now, that's baseline, right? It's baseline how the system
Get
works,
it.
right?
Clear cut. We're on the same page, right?
Right. So as you start making more money, that's where you got to look at being like, okay, I have my LLC. How do I make it more efficient, right? Easiest way, step number one, is say I'm an LLC, but I'm going to be I'm electing to have my LLC taxed like an S corporation. It's very simple. It's an election you make with the IRS. Send a couple forms in, boom. Now you're having this whole concept we just talked about. You're the employee and the employer are a little separate, right? You're still an LLC. You're just choosing to be taxed differently. Why you're doing that is because you now have the right as an owner to take profit distributions as well as pay yourself a salary, versus as this flat LLC, all of it is subject to the self-employment taxes, versus in the S corp, only the amount you pay yourself through wages. So obviously, if you think about it, you could pay yourself a very low wage, right, and just have it all as a distribution. What the government says is it has to be reasonable. So let's say as a podcaster, you would have to figure out what's a reasonable salary that an average podcaster makes, right? And then
I don't want to be average though.
then you'd be like, what does the guy from Entrepreneurs on Fire make? Like, he makes a lot of money probably.
You want to know something crazy? That guy went to PC.
Yeah.
John Lee Dumas, did he?
And guess who emailed him? And guess who got back to him?
You did.
Greg, come on, man. I may act nice, but I'm a psycho.
I love it. Yeah, he's making a lot of money, right? So he always talks.
He lists his bread in the top corner of his website.
He's like netting $100K a month. So
off that ad expenditure,
right?
Generating ad dollars, man.
Passive income.
I hate that term though. There's nothing from at least where I am. There is nothing true about passive income. It's like, I get you can make money and you don't have to exert yourself, but dude, this passive income thing doesn't make sense. You got to work like a psycho every day.
So there is passive income out there, right? So like if you
real estate,
without changing subjects here too much, if you buy real estate and then it's paying you a dividend every month, it's pretty passive.
You still have to monitor your real estate. Make sure your employees are in check. You got to make sure the venue's good. You got to make sure everyone's happy.
Right. It's not truly
there's no Mr. Monopoly man sitting back.
There's a miscommunication. People aren't going down to like the Bahamas and like laying on the beach and like watching the money flow in. Not until you're like
Richard Branson.
Yeah, Richard Branson or Tony Robbins. Like, no, not yet. So
what does Tony Robbins do every morning?
He jumps into like
no, what's it called though? He does something so interesting. He's like, I call it my rock. You listen to Tony Robbins?
No, I have no idea.
He has all sorts of things he does in the morning, like breathing and stuff, and he jumps in like the cold water for like 30-degree water.
What a great dude though.
He's killed it.
Absolutely. Who's your favorite entrepreneur? Like when you look at someone in business, like we're gonna shift out of the LLC stuff talk real quick. If you're like, damn, I love what that dude's created for himself.
I really respect, I love Shark Tank. I really respect Cuban and Kevin O'Leary for different reasons. I think Cuban's like a hustler to the nth degree, and I have no idea how he possibly keeps up with all the businesses he has. And back in the day when I was working at a firm, we had a client I worked on that was on Shark Tank and got an investment from Cuban. And like,
what was the company?
I don't want to disclose that, but it was a fitness type company, right? So it was crazy, and he was involved like more than I thought he would ever be involved. And I'm like, how does he?
It wasn't just TV.
It wasn't just TV. Like he was involved behind the scenes, and I'm like, how does he have the time to like do all this stuff? Like, right? Like we're trying to run businesses here, and it's like you're doing a million things. You're working on the weekends, and like you're trying to stay out of it, but you're in it, you know. And like meanwhile, he probably has like hundreds of business investments that people are calling him and texting him. So I respect how he's built things and like structured things, and he's brilliant. And then at the same time, I look at Kevin O'Leary, and I think he's a master businessman too, because he has found a way to.
This is Mr. Wonderful, right?
Mr. Wonderful. So he knows how to. He really is like a king of passive income, right? So he has a lot of money that he made, and he's willing to shell it out for a good return, right? So he always is doing royalty deals. Royalties are definitely pure passive income, or he's doing like debt deals, right? So he's like, I'll lend you the $100K, but you're going to pay me 10% interest on my money, right? So he's getting a guaranteed return.
Yeah, he's a psycho.
So
that's crazy shit.
He can be ruthless, but he definitely gets business.
I know, but doing debt deals is scary stuff. That's kind of how the economy crashed, right?
Yeah, I mean,
didn't the U.S. parlay like a bunch of these like subprime mortgages and sell them to China and India?
The banks, yeah, and like the Lehman Brothers and all that stuff. Like
that's what they did, right?
That's when I was in college. That all happened, yeah.
I know more than you think. Hey, who's your favorite? Like, who do you look up to at like its highest level of business?
I don't know. I mean, biased because of what I've read, but Phil Knight, Nike that's a great story.
What was the name of the book?
Shoe Dog, I think.
Shoe Dog. Yeah.
Yeah, that's a good one. I'd say him. I don't know. I guess I need some more role models, but
Well, there's like there's this glamorization now of like the CEO. You know, I'm sure you kind of got that kick once you start getting into podcasts and stuff.
There's definitely though, like, I'm sure all those people he's talked about say there's definitely, and you know this, there's definitely, have you ever heard of the book The E-Myth?
I have not.
So the E-Myth, I think the guy's name is Michael Gerber that wrote it. You should read it. It's essentially the E-Myth, right? Is everyone's like, oh, the entrepreneur, oh, they're killing it. They're on the beach drinking margaritas and like, oh, it must be so good to run your own business and blah, blah, blah. However, the fact is, and like I see this all the time working with businesses, is that the majority of entrepreneurs are hustling 24/7. They're scraping by. It takes them 3 to 5 years to really get going, and it's not there's not the glory behind it that there really is, right? So, what happens with entrepreneurs, and you just said this, is that a lot of times they get stuck working in their business 24/7 rather than working on their business, doing business development, right? So, part of the stuff that we try to do is like
That's the fun part.
Exactly, and like is to coach clients and stuff to try to get out of the weeds, right? Because the shoemaker's never going to grow his shoe business if he's constantly shining shoes. He needs to be
The same shoe.
Yeah, he needs to be out there like networking and
He's got to
finding
be out there
clients.
like alewife, just like grabbing people's feet.
Exactly. So that's the whole E-Myth, right? Is that you can't start the landscaping business but keep mowing the lawns.
The E-Myth is the name of a book?
Yeah, the E-Myth, right?
Can you send that to me?
I will.
That'd be great.
And I see it myself, and you're probably going to see it too. Is like the majority of time spent as the business owner is really, and I think it should be, it's in sales. It's in sales and marketing, because if I'm number crunching 24/7, right, I'm never going to grow my business. So it's my responsibility to build the right team under me that has the same values as I do and has good knowledge and that believes in me, so I can go find more clients.
Is that tough for you to have a decentralized team?
The traditional.
Well, so Greg, he has his office in Seaport, and then he's outsourced some of the accountancy.
So in
to other
general,
places.
my theory, and like traditional CPA firms with like heads might blow, but is that I've studied a couple other firms in the West Coast and in the Midwest that have been able to build practices completely virtual, 50 plus employees, all virtual, right? And what I have found in my my short time is that there's great talent out there, and I don't think you need to restrict your talent to just who's within 5 miles of you that can drive to your office, right? So, I have a great accountant that works for me out of Central Pennsylvania. He's a PwC alum, great kid.
What's his name?
I don't want to give their names away, but
I usually say shout out
his
to
name.
them.
His name's Ben. Yeah,
Shout out to Ben.
Yeah, he's great. So I found him through some like freelance website or some. I forgot how I originally found him a year ago, but he's been great. And
everyone wants to work from home.
Yeah, so he works from home, and then I have a guy named Will in Quincy who's like he's local, right? But again, works from home.
Shout out to Will.
And then my assistant is actually in Texas, Tatiana. She's in Austin, so it's like it's a virtual network.
How do you have an assistant? Like, how does she schedule and keep you organized if she's out there?
Everything's virtual, man. It's like so.
Are you on your phone too much?
What do you mean I'm on my phone too much?
Like, are you consumed by the screen too much?
I try not to be.
I am so bad, dude.
So I mean that's like a focus thing, but yeah, I try not to be either. But yeah, so like the assistant's been great as far as like handling all the administrative stuff, because like when you're doing everything as a business owner, it's tough. Like you're paying the bills, you're sending the emails, you're scheduling the calendar, you're scheduling work for your team. It's like it's like half your time, right? So like as much as I can offload to like a part-time assistant, I found that very valuable.
And you just want to move that top line.
Exactly. So like the accountants, they do their stuff, and I have a couple of people that do just tax stuff more part-time during the tax season. So that's how I've kind of built things completely virtual. There will be some people in-house someday, but don't feel as necessary yet.
C-Mac, could you see there being a benefit to that, having a decentralized team as you go into PwC?
Yeah, I think, you give everybody the opportunity to kind of work for themselves. They can get what they need to get done, and then they can also balance their life around it. It's like, as long as the work's getting done, I'm sure, Greg, you probably have no problem with the team around you.
No problem.
Would you prefer that?
Yeah, and that's kind of where the world's going.
Yep.
Like the beauty of this technology is you can communicate all the time, which has its ups and its downs, but
not that pure communication.
Yeah.
I mean, the other great thing,
face to face, like Greg, your skin is glowing, man.
Yeah.
You seem like you look great.
The great thing is though, like when you can. So my client niche is mostly startups and entrepreneurs. So a lot of them are tech focused startups, right? So
you're in the right place for that.
Yeah. So a lot of them come out of Harvard, MIT. They're artificial intelligence. It might be biotech. So they're in the technology world in general. They don't really care if we're gonna have like virtual communication. Like I'm not really focusing on the person or the business that wants to have like stacks of paper sit down meetings. I'm paperless. I require people to be paperless. I generally try not to accept like paper mail. So that's what I'm focusing on. So like there's no, so I've been able to find clients in California, Texas, Florida, anywhere because they don't care that it's, they get to know me. We can have Skype calls.
As long as the job gets done.
As long as the job gets done. And that's, they find the best value there. So, so it also has allowed me to expand my boundaries, right? And I'm not just focused on
move faster.
Yeah, I'm not focused on a 7-mile area outside of Fort Point in Boston, right? I'm licensed to practice anywhere, so I can find clients in Idaho if I wanted to, right? But so, that's the biggest thing about having, a virtual presence, a virtual team is that I have my, everything's in the cloud, software based. So, my remote team can log into my system remotely, right? So it's all still secured through my side. So they don't have to like buy software. It's all hosted in the cloud. So it's like, it was easy for me to do this because I started like that versus like a traditional firm is trying to like transition to that. And it's definitely not easy when you have hundreds of people and you got to try to put them in the cloud or let them work virtually.
I feel you. So I just want to make sure we shift back to the LLC real quick, just so we can close it up. So I've gone through the basis of cool, and we're going to have to just squeeze this in, but no rush, but I feel like you got somewhere to go. So, okay. So there's I have my LLC. I know what I'm paying in taxes. Now, what am I getting?
Okay. We'll try to do the abbreviated version of this. So the first best thing, right? Now,
simplified version.
Simplified version.
For the illiterate, not for the computer brain.
Yes. Simplified version. So you guys all know about the tax laws they passed in 2018 and 2017, right? So they changed a bunch of stuff around.
We all know about those.
Okay, so they passed new tax. People call it like the Trump tax cuts.
Okay.
So they did these tax cuts, and they mostly favored small businesses, right? So as the most default example I can give, if you're a single member LLC and you made $100,000, the government now says you automatically, just because you're in business, you get a 20% deduction off the top. So
we're getting taxed on 80 racks.
Boom. You did nothing. You just showed up. You just showed up to play.
I just bought the LLC.
Yeah. So your $20,000 deduction. It's huge. I mean, depending on what your ultimate tax rate is, you're saving thousands of dollars now, right? Because you're in business. So it's a huge incentive for businesses for people to start businesses, right? So if it's the person out there like, should I this side hustle, should I just keep like doing it on the weekends, or should I actually try to like make a business out of this? Do it, because you're gonna, even if you make a little bit of money, you're getting a deduction. And now, which we'll get into now, is now you have the ability to turn certain things you might consider personal into more business type expenses, right? So let's run down a quick list here. So
let's make it really simple.
Really simple. So things that people can definitely deduct, right? Portion of your cell phone bill. Okay, so I'm sure you don't have a separate business cell phone. I'm sure it's all the same, right? You're texting me from the same phone. You text him on the weekends, right? So
no, I'm big business. I got two.
Yeah. So you can certainly deduct. So if the cell phone bill was $100 before you started this business, right? It actually probably cost you $125 to pay that $100 because you were taking after tax money to pay that cell phone bill. Let's reverse situation now. Now you can run that cell phone bill, or let's say 75% of it through your business, right? So you're saving. That's
so how much am I paying
deduction. Now? So now you're paying $75, right? So cool. On using a 25% example, so you're saving money, right?
Can I write off every meal?
No, you can write off. You can write. I mean, as you want to talk about a red flag, like if your biggest expense in your business is meals, you're asking for an OC. But certainly there's nothing wrong with meals, that business meals where you're talking about business or stuff like that. Definitely something you should do, right? Just keep a record of it. Because someone like you that's going to be doing business development, yeah, you gotta make sure you do that, and you only get a 50% deduction for meals, right? So, but it's better than zero. Other things, so like travel. Okay, so let's say
I'm going to LA next month.
Beautiful. So let's talk about like a cool example quickly that, things people don't usually know. So let's say that you are going to travel to LA for work for this, right? You're going to go there on a Thursday, you're going to work Thursday, Friday, and then you're going to come home Monday, but you're going to party in the weekend, right?
I'm not going to party, but I am going Thursday through Monday.
Perfect. Okay. So
I don't booze great.
I don't
go to West End Johnny's like you.
I don't go there. So whatever you do on the weekend, maybe you do like, God knows, you go paragliding or something, right? So
God knows.
But you're paying a hotel for those 2 days anyways, right? So if the majority of your time on that trip, which it sounds like it's going to be, is going to be the substantially for business purposes, you can deduct all of that travel, all of that hotel stay, right? So you can now say like those $200-$300 hotel rooms on Saturday and Sunday, right? Even though you're not, because you did business the majority of time you're there, right? You don't have to allocate things down to the second. So long as it's the majority of time you're there, now the whole round trip airfare plus that hotel is, could be deductible to you. So
how much of a deductible?
It's a deduction off your income, right? So if you have
so completely free.
It's not. So let's talk about it. A deduction is essentially the easiest way to think of it is it is the amount of the expense times your tax rate. That's what the actual dollar savings are to you, right?
Got it.
So, okay, so that's another cool thing.
So let's say the whole trip is $1,000.
Mm-hmm.
How much am I paying now?
So say the trip was $1,000, multiply it by your tax rate. Say your tax rate is 25%. That's your savings, right? So you're actually physically saving $250, right? Versus if you just use your bank.
So that $1,000 trip now cost me $750.
Correct.
Got it.
Okay, so other things that people always miss, and some people, some people are afraid of. So like a home office, right? So let's say that you have this beautiful studio, but like you're actually doing a lot of like business development work from home, right? You have, I don't know, you have a 2-bed or you have a second bedroom that you're just grinding out work in there. That's what you're doing, right? So now you can allocate, the expenses for that room as a deduction, right? So it's really a non-cash deduction when you think about it.
So you could some of the shit you pay for in rent.
Exactly. So let's say that room, that's your home office, is 20% of the total size of your apartment or your house. So all those kind of expenses, so your utilities, your rent, your cable, your internet.
Wow.
So say 20% of that, now that becomes a business deduction to you. So if you're paying $1,000 in rent before, and now you have the ability to deduct some of that and get a tax savings, you should definitely be doing it. So that's one of those things that's just worth having, talk to an accountant, get it documented properly, but you should be doing it if you have a home office because it's a big savings. That some people are like, oh, that sounds like an audit red flag. It's only an audit red flag if you don't do it properly. So you gotta get it all done properly. If you have an LLC, you're 100% allowed to do it.
2 more LLC questions. So 1, let's say that I move with a team,
mm-hmm.
and then, for instance, we had to paint this room.
Mm-hmm.
Is there a benefit to me creating a new debit card out of the bank account, the business bank account, which is my bank account, giving it to the team member and saying, hey, go buy the paint or other business expenses on this card?
Okay, so
does that make sense?
You're saying right now your personal bank account's your business bank account?
Will the feds bust me if I say that?
So no, but what you should do is, so you get your EIN now, right, from the IRS. Simple to do. You can walk down the street to Bank of America or Capital One or somewhere, some cool bank that gives good incentives for businesses, and say, hey, I have an EIN. Here's my EIN. Here's my state papers. I want to open a small business bank account for an LLC. They're not going to ask any more questions than that. They're going to say, all right, put $100 in or $500 in. Why you should do that is because we go back to this concept of like the lawsuit and piercing the corporate veil and like what's liable and what's not liable. Well, if you're an LLC, but you're using your personal bank account, how is one to know what is really business and what's not? You're commingling things. So it becomes messy in an event of that.
Separate. Or
an event of an audit, it become messy, separate it, right? And it's easy to do. It's not going to cost you more money. You might actually get some benefits You might be able to get a business credit card. Say it's still going to be probably you're probably going to be the guarantor behind the credit card personally, but there's business credit cards that'll give you, say, if you're traveling a lot, you'll get good business miles and things like that. And you'll establish business credit over time. But and if you're going to have employees or contractors, definitely go to the bank and say, hey, we want 2 or 3 cards because I have a couple people I want to give cards to. That's one of those like day one things you should definitely get done. It's going to prevent headaches down the line.
Got it. Okay. C-Mac, before I ask my punchline question, do you have anything?
No, I'm all good. I enjoyed it.
You have fun?
Yeah, well done, Greg.
Good times.
Killing me. You're ripping it.
I could go on for like 3 more hours, by the way.
I can tell, man. We'll
We
do it.
didn't even talk about tax credits, which are great, but we'll get to that next time.
As the business grows, we'll have you pop in a couple times. How about
Of course.
that?
Love it.
And I can say, hey, Greg, what are we doing wrong, man?
We'll do a tax season episode where we can talk about like the nitty gritty of how to save. So
That sounds a little boring.
I make it fun. I try.
Okay. All right. So listen, this is Sammy Spielberg. That's who's editing this. This is what we're gonna do for the content question. So there are a bunch of people in the city who have their own thing. They have their own like side hustle. Mm-hmm. They could be an artist. They could have their own T-shirt company. They might work 60 hours a week and they sell something on eBay on the side. When would be a good point to LLC the business? When do you know you should do that?
I would say a good time to do it is when you've crossed the line of just being really a hobby, right? Where you're actually have a motive and an ability to make a profit, right? If it's purely a hobby and you're like, I'm losing money on this thing, but I like doing it, maybe not. But if it's something like, hey, I can make $1,000 a month on this, do it. Because I think I've seen businesses go from 0 to 100 in 6 months, and getting that stuff done early can be worth it. Again, people need to know that the cost behind doing it, right? And you got to pay the filing fees and stuff like that. But at the end of the day, I'm a proponent of getting stuff off of your social security number and not operating under an individual when you have a profit motive behind you.
C-Mac, all good, bro. No worries. Okay. So with that being said, GDP is newly LLC'd. It's documented. Everybody knows about it.
Is it called GDP LLC? Or is it
It's called Golden Deer Productions.
Okay.
I think, LLC.
Okay. Very formal.
Very business.
Hi, I'm Greg O'Brien, and that was my golden hour.
And he's a great guy, and we learned a lot.